It's a beautiful Monday morning. Good morning and welcome to Business Morning. I'm Chimeze Obi Iwagu. We kick off from the global oil market space as prices rose this morning as a tropical storm in the Gulf of Mexico forced companies to evacuate rigs and halt production, but gains were kept in check by wider concerns about excess supply and falling fuel demand. U.S. West Texas Intermediate crude futures were up 18 cents at $37.51 a barrel. Brent crude gained 9 cents to $39.92 a barrel. Both contracts ended last week lower, a second consecutive week of declines. Tropical storm Sally gained in strength in the Gulf of Mexico west of Florida on Sunday and was poised to become a Category 2 hurricane. The storm is disrupting oil production for the second time in less than a month after Hurricane Laura swept through the region. Typically, oil rises when production is shut, but with the coronavirus pandemic getting worse, demand concerns are to the fore. While global supplies continue to rise, the U.S. is the world's biggest oil consumer and producer. In Libya, Commander Khalifa Haftar committed to ending a months-long blockade of oil facilities, a move that would add more supplies to the market, although it was unclear if oil fields and ports would begin operations. The Organization of the Petroleum Exporting Countries and Allies, a grouping known as OPEC+, meets on September 17 to discuss compliance with deep cuts in production, although analysts don't expect further reductions to be made. The Nigerian economy is no doubt currently going through a challenging phase with the various weaknesses that are beginning to crystallize given the vulnerability of the economy. With the advent of COVID-19, oil prices have precipitously suffered significantly drawdown, with fiscal revenue taking a major hit as Nigeria's economy remains largely dependent on oil. Given these developments, both the monetary and fiscal authorities seem ready to navigate the difficult terrain by introducing several measures and reforms and taking notable steps towards the growth of the economy. One of such steps is the recent inauguration of a steering committee of Nigeria's new development plan, Agenda 2050, by the president. The main objective of these plans, according to the president, is to lift 100 million Nigerians out of poverty within the next 10 years, particularly given the World Bank's projection that Nigeria will become the world's third most populous country by 2050 with over 400 million people. Well, joining me now is the Group Managing Director and Chief Executive Officer of AfriInvest West Africa, a leading investment banking and financial conglomerate firm in Nigeria, Chuke. Good morning, Mr. Chuke. Thank you very much for joining us on the program.
Good morning, Chimeze. It's a pleasure to be here.
You're welcome. Well, first it was Vision 2020, and then we have the Economic Recovery Growth Plan, and now it's Vision 2015. What's your take on these?
I think the most important thing about any plan is your commitment and willingness to actually execute. I think my very first economic plan I remember was the Vision 2010, which was done by General Abacha. I believe that was something like in 1996. So it was a 14-year plan. It had really grand ambitions for Nigeria. Subsequently, in 2009, if you recall, President Yaradua did a Vision 2020. That was 11 years away. And here we are now in 2020. And none of those two plans have come to fruition. You will recall that this government launched the Economic Recovery and Growth Plan in 2017 on the back of the economic recession we saw in 2016. Not very much was achieved out of the ERGP, but now we are in 2020 and we've sort of kicked the goalpost away further to 2050. So it's all very nice and good to talk about the Nigerian agenda for 2050. I think the key thing here is to really focus on how you actually begin to implement some of these noble plans. And if you go back to even the very first one, that is my own memory, of 2010, some of the objectives there are still laudable. And that one is even sufficient and quite relevant in Nigeria today.
Now, you've talked about implementation, which is a key issue in any policy that is being made by any government. Well, talking about steps the government would really or naturally take towards implementing some of these visions. We've seen the present administration inaugurating what it called the Vision 2050 committee, which is to be chaired by Mr. Atedo Peterside and, of course, the Finance Minister Zainab Ahmed as co-chairperson. What changes do you hope, to see in this seeing the economy, short to medium term?
The key note, the most important thing I heard about that Nigerian Agenda 2050 is how to try and lift 100 million Nigerians out of poverty within a very short period of time. In order to do that, that means that the impetus of this plan must focus on the youth, because really these are the people that hold the key to growth in the future. Biggest problem facing the Nigerian economy today is, where do you find growth? In a world of declining resources, in a world where oil is becoming less and less relevant, and that's the mainstay of our economy, in a world where a lot of the other countries, major economies of the world, are also suffering as a result of COVID-19, how do you find growth? How do you revive this economy? So the focus of this plan must really be something that is targeted at the youth. And if the chairperson, Atedo Peterside, and the Minister of Finance, if they would organize themselves to kind of think, what can we do for the Nigerian youth today? My humble opinion is that you need to focus on education, you need to focus on technology, and you need to focus on healthcare. Because if you can uplift the quality of the human capital, then you actually have the resources in the future that can begin to transform this economy. It's not a question of, yes, we are lacking in infrastructure. Yes, we are lacking in quite a lot of other physical assets. But without the human capital to bring all of this together, we cannot be on the same page. And I have to say that perhaps in a world of rapid flow of information, people can notice a situation in Kaduna, and in 5 seconds is all over the world. I think the issue of social justice needs to be dealt with, so that people have a sense of ownership and harmony with the entity called Nigeria. And so we must kind of think of, how do we bring everyone together so we're all on the same page and understand that we all have the same problem to solve. Whether you're from Maiduguri, or you're from Enugu, or from Kaduna, or from Lagos, we all have to sort of have the same view to tackle the same problem. And if we don't get that together, then it becomes quite difficult to organize people to be able to achieve the most noble objectives, no matter how beautiful that plan is. So I think that, wrap up, the plan must focus on the youth, and the plan must focus on education, supported with technology and also the health, so that we can have the right quality of human capital that can lift this country out of poverty.
Right, let's look at the economy broadly. Now, the country is definitely not in the best of times, as there are so many issues to consider from the macroeconomic landscape perspective. What is your broad-based assessment of the Nigerian macroeconomic terrain amid this COVID-19 pandemic?
Well, it's a tough time. We are going to be entering into a recession, I would expect, by the end of the third quarter. As you saw, the economy contracted by about 6% in Q2 as a result of COVID-19. IMF is projecting a 5.4% contraction of the overall Nigerian economy for 2020. And so when you have 2 quarters of contraction, that puts into a recession. This will be the worst we've seen in a long while. The last recession, if you recall, was in 2016. The economy contracted by 1.6%. So a contraction of 5.4% is more than 3 times the effect we felt in 2016, which was pretty bad. But if you translate that into numbers, inflation is now approaching 13%. Well, food inflation itself is above 15%. That means for the average Nigerian, the cost of food has been rampaging up, and that makes it more difficult. When you look at things like unemployment, we're now sort of about 23, 24%. But if you actually look closer to youth unemployment, we're closer to 34%. When you now unpeel that data, you're looking at something like 15 million people that have gone out of employment since COVID-19 began. So that's quite serious. So there's a lot of suffering in the country. And then how do you revive this when oil prices have gone down and the world is trying to move to renewable energy, electric cars, and yet our whole political economy is still tied to oil? If you look at the statistics of the economy in 2016, you'll see that in a depressed economy, all the foreigners flee. So we had a very low foreign direct investment level in 2016. But importantly, the foreign portfolio investment, which has often been used to prop up the economy, also disappeared. So that means, therefore, that we need to kind of look inwards to understand how to resolve ourselves out of this situation. Unfortunately, it's a job that is politically will not be sound, will not be well accepted, but the government has now quite early began to reform, and you've seen sort of the fuel price reforms and the regulation happening. You also seen what's happening in the electricity and power sector. But one area that is closest to home is actually government expenditure. If you look at our budget, over 75% of our budget is spent on recurrent expenditure. If you think about a budget of 10.5 trillion naira, and most of it is being used to service maybe 3 or 4 million civil servants in the federal system, that tells you that's a misallocation of funding. So I think to be able to free capital up in order to find it and put it in more productive uses to resuscitate this economy, you have to find a way to achieve some cost savings in government. But that has to be borne equally. The political leaders need to show their own commitment in doing that by also deciding that, okay, this is where we're going to cut our own expenditure before coming to the citizenry and saying, look, we all want everyone to tighten their belts. You've seen a proliferation of taxes coming on, taxing businesses in a depressed economy. That's even more like kicking a dog and calling it a bad name, because many companies are suffering. They have not actually earned the income to pay those taxes. This is actually the time to reflate the economy. I know there has been some effort in terms of fiscal stimulus. There's 500 billion naira that's been, announced. How that has been fully applied in the economy is still trickling down. But 500 billion naira is really 0.5% of GDP. So it's not significant when you compare it to South Africa, where their own fiscal stimulus was about nearly 7% of GDP. So there's a lot of work to be done. The economy is in a difficult state. There's limited resources available. So one has to be creative. But the most important thing, you have to look first at yourself at home. Where can I save money? Where can I cut costs? And then use that additional cash to deploy into areas that can create growth in the future.
Well, the federal government, of course, is seen to be making some kind of positive moves towards economic development. You talked about the various reforms. And of course, last week, we saw the ministers having a retreat on how best to implement some of these policies. You noted that implementation, of course, is very key. Now, how much of impact do you think this would have? Do you see that sincerity on the side of government towards doing the right thing? Do you see that willpower? Because it's one thing to make policies, it's another to have the political will to implement those policies.
Yes, it's true. It's and that kind of comes back to the question of social justice, value system, orientation of Nigerians towards the center. For the government to be able to convince Nigerians that they are doing that the rising from their retreats, that what they want to do is the right thing, they also have to look at other aspects of how Nigerians perceive what is going on around them. There's massive insecurity all over the land. There are many cases of injustice that are sometimes even visited on Nigerians by the government itself. So one has to be careful that you're able to sort of try to harmonize the psychology of Nigerians into having a positive view of this country. As I was coming to your studio, I saw a WhatsApp video of Nigerians in London rioting or sort of demonstrating for the creation of an Oduduwa state. It tells you again how divergent we are. So there has to be a focused commitment by government to try and bring more and more people to the center to see reason. And that underscores the challenge that they have in implementing these transformational ideas they've come up with from their retreat. But the retreat is a good thing. The most difficult part is the orchestra of running a government, because you have different systems running simultaneously. You've got the fiscal arrangements, you've got the monetary policy people, you've got health, education, security, justice. All of that has to be synchronized. That has been one of the biggest challenges for successive governments in Nigeria, to be able to synchronize their plans so that the bits that reinforce each other work together, and the bits that may negate each other are minimized as much as possible. Because if you then do that, then it is quite possible that with capacity of what you have in Nigeria, the people here, the talent, the education, that we definitely have the ability to, get ourselves out of this mess.
All right,
but it won't happen if you still feel that, if some people feel that this country belongs to them and they are the only ones that have the exclusive privilege to its resources on a first basis. And those areas of injustice need to be dealt with, I think, quite fundamentally.
All right, Mr. Choke, talking about the vision, the new vision 2015, the aim, of course, is to bring 100 million of Nigerians out of poverty. AfroInvest is one of the firms that have contributed to macroeconomic discourse over the years, especially as it relates to some of these reforms that we are currently seeing in the electricity and the petroleum sector. What are your perspective of this current reforms? A lot of people feel it's ill-timed, as some have argued. Should we have waited some more?
We've always been writing about these reforms. So for as long as I can remember, I think for the last 5 years, we've published several reports. There's one titled "Reform or Be Relegated." Another one we did was "Beyond the Precipice," pulling back from the brink. The calm before the storm. We've said it time and time again that we need, as a country, to be proactive in reforming. Unfortunately, those words fell on deaf ears. Now we're being forced by the Bretton Woods Institute to reform. We've sort of hit a wall because we've run out of cash, and we have to go borrowing from overseas. And to do that, they then put some conditions to those borrowings. Then we're then forced now to then do too much, in my view, all at the same time. If you think of you're doing the petroleum reforms in the downstream sector so the prices can move, which is right, but then you also are doing that at the same time with the electricity reform, so the prices are now going to be more cost reflective. And we're also going to be introducing additional reforms in other sectors of the economy. Yes, it's great, and one could say, given the crisis we are facing, this is the best time to actually pull all those things in. But we could also come into a situation where it can shock the economy, and we go into a long period of stagnation before we come out of growth. Because the key thing out of all of this is, where do you find the growth? It's all very well to do the reforms, but how do we get additional resources to invest in the places that can give us growth? And I think that the biggest asset in Nigeria is the people. And the most valuable of that is the young people who need to be educated and who need to be healthy. So how do we get resources to deploy into education and get these guys to be technologically savvy so they can become the human capital of the world? Nigeria has a huge opportunity today with all the remote working arrangements we've all introduced to set up a massive center for business process outsourcing so that Nigerians can sit here in this country and be working for many global companies around the world. And the way to do that is simple. Telecommunications, we already have it. We can do more. Get fiber across all the major city centers in the country. get people to be properly trained as software programmers. We're training a lot of lawyers and accountants. From here, they can start earning salaries, while working for companies abroad.
Right.
We can certainly do that. We can do a whole lot more in attracting foreign direct investment. For far too long, we've sort of paid lip service to it. Once upon a time, this country would do easily $7 to $10 billion of foreign direct investment. In the last 5 years, we've averaged about $1 billion or less. This year to date, we're at $340 million of FDI.
All right,
what
Mr.
we've done,
Chuke,
on the other hand, is to use foreign portfolio investment, which are people investing in our capital markets, to prop up the foreign exchange environment. That is not healthy, because these guys come in for a good time. When times are difficult, they'll disappear.
Wow.
And that's the challenge we're faced with today.
Yes, I wish we have more time to dwell on these issues. But keywords there: education, technology, health, are very important to push this economy forward. Yeah. Thank you very much for your time. Chuke is the Chief Executive Officer of Afri Invest West Africa. Thank you very much for your time.
Thank you very much.
We'll take a break now, and when we come back, we'll look at the pension industry with a focus on the defined benefit pension schemes managed by PITAD. To stay with us. The Pension Transitional Arrangement Directorate, PITAD, last week announced that a total sum of 96 billion naira had been disbursed to pensioners between July 2019 and August 2020 under the old defined benefit pension schemes. You would recall that the Pension Transitional Arrangement Directorate was established in 2014 as part of the transitional arrangements for the public sector from the defined benefit scheme. PITAD took over the functions of the various pension departments of the public service and is responsible for payment to existing retirees of the federal government that retired up to June 2007 and are exempted from the contributory pension scheme. Well, joining me now is the Executive Secretary of PITAD, Dr. Chioma Ejikeme. Thank you very much, Dr. Ejikeme, for joining us on the program.
Thank you.
Now, can you give us...
Good morning.
Good morning. Good morning. You're welcome. Can you give us an overview of what has been going on within the pension industry, particularly as it concerns the defined benefit scheme that you have managed in the past 1 year?
Thank you very much. I must say that in the past 1 year, it actually has been intense. I took over from the Honorable Minister for State for Environment, Barrister Sharon Ikazo, about a year ago. And the velocity with which he was moving demanded that I hit the ground running. We started with verifications, completion of verifications for parastatal pensioners. And we have been working hard to make sure that pensioners get their monthly pension regularly, as and when due. We have also been working on payment of gratuities, payment of arrears, payment of benefits to the next of kin of deceased pensioners. We've been working on trying to recover funds trapped with underwriters belonging to the defunct agencies. We've been working on a whole lot to make sure that pensioners within the defined benefit scheme are well taken care of.
Now, last week, you announced that a total sum of 96 billion naira had been disbursed to pensioners between July 2019 and August 2020. How were you able to achieve this despite the COVID-19 pandemic?
I must tell you that we have a crop of dedicated staff at the PITAD. And regardless of the COVID pandemic, government has been very supportive. The commitment to pensioners has been very high. So on a monthly basis, we always get the releases from government to be able to pay our pensioners. So regardless of the COVID pandemic, we've been working. Even when there was a shutdown, we were working. I declared PTAD an emergency service because our pensioners, the palliative that they get is the pension, the monthly pension. So we had to sit back and make sure that we prepared their monthly pension, following all the COVID guidelines, and we've been able to achieve that as a result.
Now, we know we have a lot of outstanding, pension outstanding there. Is this 96 billion naira the last of the outstanding arrears to be paid to pensioners? If no, what plans do you have to clear these outstandings as soon as possible?
The 96 billion we're talking about is the monthly pension. Monthly pension that the pensioners get on a monthly basis. The arrears are a different kettle of fish altogether. You may recall that this current administration, in its magnanimity, brought on board a lot of pensioners from the defunct agencies, the agencies that were privatized as far back as 2005. So we have been onboarding pensioners from these agencies and taking care of their pension. We also have some of them that, based on their conditions of service, they're supposed to get a one-off payment, like the NACO and ALSCON, and we'll be working on, we've actually paid 306 NACO pensioners their one-off payments, and we're continuing with that, after which we're going to start with the Aluminium Smelter Company pensioners to pay their one-off payments. We inherited a lot of arrears from these defunct agencies because the pension liabilities were just passed on to PTAD, whereas we didn't receive their pension assets, a lot of which we find the underwriters are holding on to. And we're vigorously chasing them, including taking on legal action against them, to make sure that we recover the pension assets with them. We also have some offshore pension assets worth about £25 million with the Crown Agents of London, and we're chasing that as well. And hopefully, before the end of this year, with how far we've gone with that, we expect that we should have that money back to Nigeria.
Now, talking about
the Civil Service Pension Department, we have a lot of arrears in that particular department. And that's as a result of the verification that we carried out between 2015 and 2017. So we are still validating that verification. And as of today, I have set up a project that should compute the benefits of these civil service pensioners. A lot of arrears, a lot of gratuities unpaid, and I actually declared a state of emergency in that particular department. And in all honesty, we have been funded by government to be able to take care of the arrears of the Civil Service Pension Department. So hopefully before the end of this year, with this project ongoing, we should be able to get a lot of the liabilities taken care of.
Right. While trying to take care of these outstanding arrears, do you consider, adding some kind of interest, considering the length of time it has taken? We've seen inflation rate has risen astronomically. A lot of these pensioners have died and some are on their sick bed. Any interest coming with these arrears?
PTAD is just an engine room for carrying out the mandate of paying pensioners of the defined benefit scheme. We do not have any place in putting together salary structures. We do not have any place in creating conditions of service. We do as we're told. And we do not generate policies, as it were, that govern pension payments to the defined benefit scheme pensioners. If government, in its magnanimity, decides that that could be an option, which I doubt very much, because I really believe that government has done a lot for our pensioners, especially the pensioners from the defunct agencies. I strongly believe that the government of the day has really shown a lot of commitment, a lot of care, and a lot of empathy towards their plight.
Now, in carrying out your duty, data is one key tool you need. What is Peter doing to have a credible and reliable pensioners database?
We actually have started with verification of pensioners. That is the starting point. And we have been carrying out field verification of our pensioners nationwide. And as of November, December last year, we completed the field verification for the pensioners from all the operational departments. So right now we're validating our data. A lot of our pensioners are deceased. A lot of the pensioners on the database are not supposed to be there. So these are part of the issues that we're looking at. In terms of a clean database, we are about to put in place the I'm Alive project. All over the banks, we have monies belonging to deceased pensioners in the banks. We only get to know about these monies when their loved ones go with their letters of administration and they want to collect the money. Then the banks will get back to us. So we're trying to put up a vigorous drive to, first of all, see how we can get the deceased pensioners from the banks before our I'm Alive project takes off. Our I'm Alive project, we're about to start before the end of the year. It will be a pilot scheme. But before then, in collaboration with the banks, we should be able to look at some accounts that are inactive, not dormant, because so long as we're paying monies into those accounts, they would be active accounts. They wouldn't be dormant. So if these accounts are inactive, we can now begin to work from answer to question and see how we can contact those pensioners. And if we're not able to contact them, we will now look for how to retrieve our monies from the banks. So
right now,
we have put in so many programs in place to be able to clean out our database using technology.
Now, there's also an issue of pension scammers. What are you doing, to checkmate these activities?
We are constantly creating awareness to our pensioners. We keep saying, PTAD will never take money from you to process your pension payment. PTAD will never take money from you to process your arrears. PTAD will never take money from you to put you on the payroll if you're not yet on the payroll. And we keep telling our pensioners that. We are there on air, we go to the newspapers, we go through the pension unions, and we ask them to let our pensioners know that nobody would ask them for money. It is their rights. It is their money. There's no way anybody is going to be asking them to bring money to get their entitlements. We are also collaborating with the ICPC and the EFCC to make sure that we are able to round up these fraudsters in the event that they do show up. They're still on the prowl, but we continue to tell our pensioners, PTAD will not collect money from you for your entitlements. And most of the time, the pensioners that fall prey are pensioners that the fraudsters are telling them about amounts that they cannot even earn as pensioners. So there's also an element of greed on the part of pensioners when it comes to the pension fraud. So we also continue to appeal to our pensioners, the ones that are yet to get their benefits, to continue to bear with us. We're working hard to make sure that we take care of the liabilities.
Okay, now you've been in the directorate for 1 year now. So going forward, what are your short to medium term plans for the pensioners and the directorate, of course?
Well, the first thing would be a prayer that we continue to pay pensions regularly, as at and when due, and that we continue to take care of the welfare of our pensioners, because that is key. Our pensioners depend on the stipend that we pay them every month. So it is very, very important that this is sustained. And I'm grateful to the government of the day for their commitment to the payment of monthly pensions to pensioners of the defined benefit scheme. I'm also grateful to the Ministry of Finance, National Planning, Budget and National Planning for prompt release of funds every month for the payment of pensions. Even the National Assembly, I'm grateful for their support. They have been very supportive of us, and they are all committed to making sure that we succeed as an agency. I have mentioned the I'm Alive project, which is related to data cleanup. We need to clean up our data to know exactly who our pensioners are and make sure that we are actually taking care of people that we're supposed to be taking care of.
All right.
PTAD, by virtue of who we are, we have a sunset clause. PTAD is supposed to cease to exist when the last pensioner dies.
Yes.
So we are actually looking at an actuarial valuation, preliminary look at the data that we have on ground now shows that PTAD, even though it's called a transitional agency, still probably has an active lifespan of more than 20 years. So we need actuarial valuation to know exactly the way forward for PTAD and begin now to plan for the winding down of PTAD. Our graph is one that goes this way. It's sliding down. So we have a situation whereby we shouldn't have that many new entrants into our database because we should be expecting that our pensioners will be falling off the database as a result of death over time until we get to a point where we come to point zero. But then we have to work out the modalities for that. We also are looking at a health insurance scheme for our pensioners. I am happy that the pension unions are really very interested in this. They actually have shown that they are willing to contribute part of their check-off dues for a health insurance scheme to be put in place for the pensioners. And we also know that Nigerian organizations will probably be interested in pushing in some of their corporate social responsibility to make sure that these senior citizens get a health insurance scheme in place.
Absolutely, Dr. Chioma. Well, that's the much we can take on that for now. Thank you very much for your time, and we wish you luck in your endeavor. Dr. Chioma Ejikeme is the Executive Secretary of PTAD. And a quick review of last week's equities trading and outlook. Here is Temple. Well, Temple, profit taking was what we saw last week. Is there likely to be a rebound this week?
Absolutely, there will be a rebound as you have resumed work again. Thank you for coming back to work, Chimeze, because I missed you so much. Quickly, market was down marginally last week, 0.05%. That's the week-to-date performance. Of course, that represented some 7.1 billion naira exit from the market. Look at the volume of transactions. It was 1.226 billion units of shares that we had traded for week on week. I mean, compared to what was higher than this that we did in the preceding week. Zenith Bank, UBA, and of course First Bank were key companies that were traded and contributed a lot to what we have in the volume of transactions at this point in time. Zenith contributed quite a number today. Let's quickly talk to Charles Fakroga, who's a stockbroker with with Citicode Securities. Mr. Charles, talk to us about the impact that we expect, the impact of the inflows that we're expecting in the capital market at large this week. We're expecting some OMO inflows and of course some coupon payments of about 142 billion naira this week. How much of that are you expecting to flow into the equity space?
Yeah, thank you very much. We've always advised investors to diversify their portfolio. So they have gotten some coupon income from the bond market and the treasury bill market. I expect about 60 to 70% of that flowing into the equity space. because that space is performing, and for any discerning investor is to take some of those income they have earned from the bond space and TB space to trickle down to the equities space. So I expect 60-70% of that inflow coming to the equity space.
And let's hope that that pie that you're expecting will be able to create some impacts. Charles Fakroga, thank you for your thoughts on the markets, and let's hope that these flows come into that space this week. He's a stockbroker with Citicode Trust and Investment. Back to you, Chimeze.
Thank you, Temple. Well, we'll see how that goes much later in the day. For now, we'll do a break and we'll come back for an opening call to London, and then we'll get back to you for the debt and currency market. And for updates from the streets of London, we have Juliana Olainka here. Hello, Juliana. Good to see you. Good morning.
Good morning, Chimeze. Welcome back to a busy week.
Thank you very much. I'm happy to be back. Well, it's a brand new week, and how are things unfolding in London, and are there headlines the markets will be eyeing?
Well, it's 29 degrees in London today. It's worth mentioning it because it's September. We're in autumn, but it's a pretty hot weather. But I've got to tell you, the markets in London are in positive territory this week. The FTSE 100 is up by 0.7%. The mid-cap index, the FTSE 250, is up by 0.4%. And we're actually seeing a rise in the pound. The pound really suffered last week. It dipped to a 6-month low because of those really intensifying Brexit talks, which went up to the scale whilst you were away last week. But there are two major talking points in Britain this week. First of all is the rule of 6. Last week, Prime Minister Boris Johnson decided to reduce the amount of people that can meet both indoors and outdoors by, it was 30 before, but now it is down to 6. And that's because the R rate here in this country is on the rise. This time last week, I believe there were about 2,900 positive coronavirus cases daily. That's risen sharply by over 3,000. So there are concerns that we could be going into more of a lockdown, but we shall wait and see. But today it is illegal to meet with anybody above the number of 6. And also as well, a debate will begin in the House of Commons. I spoke extensively last week with Temple and Bissey about Brexit and the fact that Britain did confirm that they wanted to tweak with the withdrawal agreement, which means if it does pass the House of Commons, it would break international law. Now, earlier this morning, David Cameron became the 4th former Tory leader to condemn Boris Johnson's plan. So the debate will begin today. Is it going to pass with an 80-seat majority? We're not sure because a growing number of backbenchers are not happy with Boris Johnson's route. Also, Geoffrey Cox, the former Attorney General, did say that he is willing to resign, and he's a very powerful Conservative. So lots happening in Britain today and later this week.
Well, while we keep an eye on those, one of Britain's most successful tech companies, ARM Holdings, has been sold by its Japanese owners for about $40 billion in a deal that could reshape the semiconductor landscape. Any idea why this company is being sold to U.S. company NVIDIA?
Yeah, well, this is a controversial story, and it's definitely going to have intense scrutiny, not just by the British government, but by China and also America and anybody that's involved in chip holdings. Now, ARM Holdings was Britain's most successful technology company. They used to provide smart chips for about 95% of phones, from the Android phone, the Samsung, to Apple. Now, 4 years ago, it was sold to Soft Holdings for, I believe, £26 billion. Now, the Japanese firm, over the past couple of months, have been really desperate to raise cash. So they've put the company up for sale. And NVIDIA, which is an American rival tech firm, they've agreed to buy it for the equivalent of £40 billion. Now, the issue is that NVIDIA is the rival to many of ARM Holdings' already pretty successful competitors like Intel and Apple. So they're not happy about it Also, as well, there are concerns that the production may be moved from Cambridge and Britain and taken over to America. We know that America and China are involved in a trade spat at the moment, and many of their spats are down to technology. So there is lots of scrutiny there. We do have a statement, actually, from one of the co-founders of ARMS. Herman Hauser told Reuters this morning that it's a disaster for Cambridge, the UK and Europe. It's the last European technology company with global relevance, and it's being sold to the Americans. Not a good choice. I also just heard him speaking this morning, and he also said that it's not a great idea for Britain to do this, especially considering they're trying to get free trade deals at the end of the year. Now, NVIDIA, they've insisted that ARM would maintain the global customer neutrality that has been foundational to its success and wouldn't remove it from Cambridge. But the issue, I believe, that a lot of British observers have is that we are expected to see a wave of redundancies at the end of October once the furlough scheme comes to an end. And NVIDIA or ARMS Holdings is such a crucial jobs market in Cambridge that if it does go to America, then perhaps those jobs could go. So this row is expected to continue.
And YouTube is facing a legal battle for allegedly breaching the privacy and data rights of under 13s in the UK. How much do we know about this story?
Well, it's a long-running story. We're not expecting it to get into court properly until the end of autumn next year. But a privacy expert called Duncan McCann is accusing the platform of taking the data for children under the age of 13 without the consent of their parents. And now he's actually taking Google to court, not YouTube. Google, of course, are the parent company of YouTube. YouTube have vehemently denied these claims. A spokesperson said, "We don't comment on pending litigation, but YouTube is not for children under the age of 13. Anyone who's a parent would question that." We launched the YouTube Kids app as a dedicated destination for kids and have made further changes that allow us to better protect families on YouTube. Now, in 2018, the EU and Britain came up with this data protection law to protect people's data. So now a company has to ask or request that it will be using your data, and you can confirm whether or not you want that. For children under the age of 13 who use YouTube, Duncan McCann is claiming that consent hasn't been given. I believe he's seeking £2 billion, and that will be shared to parents whose children have used the platform after 2018, and I believe they'll be getting £100 each. But the case continues, and we won't expect an update until late 2021.
We'll keep tracking that. Anyway, thank you very much, Juliana. We'll get an update from you later in the day. And back here on the debt and currency market, we have Temple back on the board.
Yes, Chimeze, quickly, let's look at the debt side of the market. These are figures for last week, Friday, where we saw investors increasing their holdings on the 2035 paper, the 27th of March 2035 paper, after they had sold off on Thursday on this particular paper. So we got some kind of inflows, of course, due to the auction that took place on Thursday. And of course, they brought back the proceeds into this space of the market. Then we know that for the NCB side space, of course, there was a bit of bullish sentiment on this side of the market as well. And for the open market side, open market authorities, we also know that the 586.16 billion naira that we saw on this particular paper, that's at the longer end of the curve, that also shrunk the yields of the market of that side, also helped for us to retain some 22% gain on that space. We have Bosun Bembe, who is an FX dealer with Access Bank, joining us on phone now. Bosun, let's quickly talk about the FX space. Last week we saw an appreciation on the Naira by some 13 basis points or thereabouts. But give us a sense of what the interventions of the CBN in that space has been lately.
Thanks for having me. So, as the investor and the stock window, what we've been seeing currently is we saw week-on-week an appreciation rate by 13 kobo. So, CBN actually started clearing the backlog of the FX demand by foreign portfolio investors. So, month to date, CBN have sold about 240 million into the market. So last week, our source sales by CBN sold about $125 million into the system. Spot at 386 levels, and last week we did forward at 394 levels. So the market has been quite active, but the CBN actually been the major player in the
All right, thank you so much for your attention, for your analysis. I appreciate them. Bosun Bembe, an FX dealer with Access Bank. And that's it. Back to you now, Chimeze.
And we wish for a profitable day and week for all of us.
Sure.
Thank you. And that's it on the program for today. Thank you for watching. I'm Chimeze Obi Iwagu.